Hey everybody, it's Mike from Orderflows, and it's what is it? It's Wednesday, September 28th, 2022, and the big market today was gold, right? I mean, there's many other markets out there for traders to look at besides Nasdaq, MNQ, and E-minis and micro E-minis that follow order flow, in my opinion, better than equities because commodity markets such as gold, are driven more by supply and demand factors, and obviously there's outside factors as well. But generally the day-to-day activity of commodity markets follow order flow better than these cash-settled financial markets. And again, sort of going back to who uses and who trades these markets, these commodity markets, it's producers, it's end users, people that need to buy it for a certain reason. And that's why, in my opinion, it follows supply and demand better than some of these crazy equity markets where you have a lot of hot money coming in and out of the market. So gold today, had a very, very strong move up. I mean, we had this big move up from, basically 1625 up to right now we're trading around 1670. So, it's almost a $50 move. That's what, 45 bucks. But what was the signs in the order flow? And again, I do keep an eye on gold. I don't actively trade it, but it's a market that I like to watch because again, it's one of those markets that other markets can tend to follow. And this morning in the gold, I know, I watch a 1 minute chart on gold, and I know what the volumes are, on a footprint is considered heavy. 100 contracts at a price, either on the bid or the offer, in my opinion, is very strong volume. Now, this morning around 5 o'clock, right, we popped up. We had a nice, basically $8 move, actually a little bit more. It's about a $10 move over 2 minutes, from 23.5 up to 33. We had that big bar here on this 1 minute chart. It's from 25 up to 33. So about an $8 move. Then what happened is we retraced all the way back. Okay, fine. Moves happen very quickly, and what you want to watch, with the order flow is if you retrace it or not, right? Is it going to continue or is it going to pull back? Because what you want to see is, is that initial buying, that initial pump up, is it still going to be there, right? I mean, for whatever reason, the market pumped, right? Then it came off. And actually very quickly, it came right back again and recovered everything. This was at 5:03 by, what time is it right here? 5:18. So 15 minutes later, we recovered that pullback, okay? So everyone's going, oh, buy the dip. Well, a lot of times you get those big moves like that, you don't get much of a dip. What I like to see is, you get that big pump up, let the market sort of breathe, let the traders reassess what's going on. This is 5 in the morning in the US. This is Chicago time on my chart, so it's coming up on lunchtime in the UK already. So it's nice to see the market just recover very quickly. Now, once it recovers after that big pump, we start making new highs. And the volumes, right? I just said 100 contracts in the gold on a 1 minute chart at a price is big volume. And we see a strong bid coming in here, 223. So I know already I've got a strong buyer. Now, this was after that pump, right? That got all the way up to 33.10, sold off. We're coming back. Now we're seeing big volumes coming in on the bid side, obviously above that high of that pump, which was down here at 33.10. So, this one's coming in at 35.70. Okay, rally up to new highs, come off again. Okay, fine, going sideways. Is this the high? Is this going to be the high of the day or not? Nobody knows yet, right? Just watch the order flow. Sort of going sideways. You do get, it's mostly negative deltas in here, minus 138, minus 70, 84, minus 86. Then you get some small deltas in here, 5, 4, 9, 21, 11, 4, minus 18 on this green candle. And we're just sort of going sideways, drifting sideways. And then eventually, again, we get all the way down to, 34, 60, push down even a little bit lower, back down to 31. Getting down here in the 30s. But as we start coming back up, right, watch the volumes. Remember, our high is up here at 39.80. Okay, there's not a lot of volume going through. It's 7 a.m. now, Chicago time. volumes are, just average, right? And you can see, 25, 50, 60, 15 contracts. It's nothing to get too excited about. I mean, you did have that one big order, that one big bid earlier at, is it 35.70, and then volume is just been pretty much steady. Now it starts taking out these new highs, and as we take out these new highs, making new highs, again, you see another big volume in here, 194. Okay, I had a big volume earlier, didn't really do much. It did give some support to the market in the near term. Market went up a few dollars, but then sort of came off and went sideways for the next 2 hours. But as we start trading in here, as we're taking out these highs, you see the 194 here, the 151. A little bit later, starting to see some more volume. Again, this is average volume as you're going sideways. Boom, take out a new high, another big volume in here, 145. Okay, so watch these big volumes, 101. As you're making these new highs, even here you got 138. As you're making new highs, you have strong bids coming in. It's not just taking out the highs and having the offers get lifted, right? As the markets move up, you're going to see aggressive buying, right? You're going to see the offer get taken out, and then the next offer and the next offer. But what gives a market legs, so to speak, is the big bids coming in to support the market. Now, you're not always going to get the big bid come in, and that's just going to put the base in, right? But I know that I've got strong buyers here. So, from 8 o'clock in the morning, 138, 140, here's 101, here's 112, right? I'm not, at this point, I'm not so concerned with what's trading on the offer because, we're at new highs of the day. So I'm not surprised to see strong volumes on the offer. But when I see strong volumes on the bid, it's telling me that not only are traders chasing this market up, but they're coming in and also bidding this market up. Okay, what's more important, the bidding or the taking out the offers? Well, I don't want to say one is more important than the other, because when you start taking out offers, bids start coming in and filling in the bids, right? The previous offers are going to become your bid. But when you see it come in for big size, then there's more to this move than meets the eye. It's a strong move in the direction. So again, 138, 146, 112, is that 101 there, and we just keep going higher. So its market is going up with the strong bids coming in to help, prop up this market. I don't want to say prop up because that's sort of the wrong term in the sense that you're thinking, oh, it can't go any lower. But I know that I've got strong buyers coming in here. They don't want to just start indiscriminately lifting the offers. They're happy to work bids and absorb whatever selling comes into the market to help keep the market from going any further. Okay, so we got 112, 111, right? Get all the way up to 55.5, start coming off a little bit. You got this nice stacked buying imbalance. See, it just sort of comes in here. Now there was strong offer here, 101. Okay, again, the market had rallied all the way up to 55.90. Again, 55.90 from 25, right? So we rallied $25. $25 move in the gold, is a good move normally. So we hit 55.90, start coming off. Again, you see some offers in here, the 149, obviously the 101 here. And then look, next bar, 102. Okay, now I'm not saying that this is related to this, but again, we're up here at highs. Obviously, people that were buying it on the way up, they're happy to take profits as the market, sort of looks like it may have peaked out for now because it was a big move. It's a $25 move up to this point, and it's starting to come off a bit here. Okay, so maybe they're taking some money off the table, but then boom, it comes right back with the strong buying, 102, right? Another 102 up here. Took out this high. Up here was what, 160 contracts. Okay, fine. I mean, we're at a new high. The fact that it just got right through it pretty easily is a good sign. And then 140 again right here, 149. So, as we're taking out these highs, you're seeing strong bids come into the market. You're not just taking out the strong offers. That's one thing. That's one side of the equation. People taking out the offers. What you want to see also is strong bids in there to absorb, this 102 here, this 149. These guys are absorbing whatever selling is coming into the market to help keep it from dropping further. Here's 102, here's 103, here's 149, right? And the market pops all the way up, straight up to 60. Now again, sort of to discuss a little bit further on, yesterday's discussion on trap traders, or stops being triggered. This is what a stop looks like getting triggered right up here. New highs, all zeros, big stack buying imbalance there. Came off. The high was 59.40. We got down to 58.80. Then the next bar continued up. Okay, that's what you like to see, right? You just see stacked buying imbalance. Although this one's probably triggered by a stop. It gives you a decent trade. As long as it keeps going up, you go with it, right? If it fades, if it starts going the other direction, you go against it. Now here, this is what we call an inverse imbalance. So you got this market, again, made new highs up here, 1662. It probably triggered a stop somewhere up here around 1.5. Boom, filled it up and immediately came down. That's why we have this red line drawn. This is just telling us, hey, you know what? What got triggered up here is probably a stop, and you should probably want to be trading against it. Right, you can see it came off a bit from the 60 area down into 57.90. Eventually sort of worked its way back up and made that new high, then finally started coming off. You're seeing some strong selling coming here with the imbalances in these bars. But again, understand the markets and that you're trading, right? Understand what strong volume is for that market and where it's appearing in the market. Now with gold, again, I know I've watched gold for decades, and I know that if I'm looking at a 1-minute chart, this is what it normally looks like. 19, 20, 18, maybe you get some bars, some prices at 50s. But, when I see 102, okay, it's big. It's not uncommon to see big volume come in at a price, but then I see 102, 103, 149, right? I start seeing a lot of volume coming in on the bid on a market that's moving up in a short period of time. It's telling me that there's bidders in the market. Okay, there's strong buyers appearing in the market. Sorry about that. To help support the market, because that's what you really want to see on a move that's going up, right? If you're looking at your bar chart, right, you don't see that there's strong support to keep this market up, keep it from dropping back down to where it was. So if you have the buyers coming in, not just lifting the offers, but if you see I got strong bids coming in here, strong bids coming in here, strong bids coming in here, that's something that you can use to your advantage. If you're just looking at the normal bar chart like this, you're not seeing any volume. You're not seeing, oh, I see strong bids coming in here. You're not. All you're seeing is on a candlestick chart, you're seeing the open, the high, the low, the close, and obviously depending on the color of the candle, either it's an up candle or a down candle. Okay, it's not giving you anything else other than that. But by looking at the footprint, yeah, you can see where that strong volume is coming in. And if it's coming in at new highs, you could feel comfortable buying the highs. Buying the highs is not something that everybody likes to do, right? Because eventually the high is going to be put in. But if you have a reason to buy the high, then great. So anyway, guys, I hope you enjoyed this video. Hope some of it made sense to you. Be sure to subscribe to my channel, so you'll be alerted when the new videos get out there. And, if you like the video, give it a thumbs up. Thanks, everyone. Bye-bye.